ICICI Prudential, the company delivered a good set of numbers. The net premium income saw a growth of almost 21%, while the net profit stood largely flat. To discuss the quarter gone by, joining us now is Sandeep Batra, who's an Executive Director at ICICI Prudential Life Insurance. And also joining us is our in-house analyst, Saloni Dhanuka. Saloni, over to you.
Sir, how has the quarter been for you in terms of qualitative analysis, and what's the significant area of improvement in this quarter according to you?
Let me talk from an H1 perspective. Because business is seasonal and that's a better way to look at it. First, on the top line, our APE for H1 grew by 36.8%. And the value of new business increased by 70.9%. So that's been a significant growth both from a top line as well as profitability point of view. As you're aware, we would like to hold out to our shareholders as expanding of value of new business, which for H1 stood at about 417 crores. In terms of other qualitative metrics, our 13-month persistency has been at 87%, and our cost ratio, which is we measure at cost, our total cost to total weighted received premium stood at 14.1%, which has become more efficient than what we had done in the same period last year.
Also, sir, how has the premium mix been in terms of protections and savings?
For H1, we have had a protection mix of 4.2% against a 3.9% that we had achieved in the full year of last year. So there has been a little bit of an expansion on the protection side. So on the savings side, we have a combination of unit-linked par and non-par, and most of the new business comes from unit-linked. Given the customer propositions of unit-linked being more customer-centric, offering choice of asset class and more cost-efficient. But as a company, we are quite agnostic. We let the customer sort of choose the kind of product that he's wanting to buy and from the channel that he would like to buy from.
Also, sir, VNB margins for the first half of this year rose to 11.7% versus 9.4% a year ago. What are the key drivers for the same?
The margin expansion over this half year is on account of multiple factors. One is, of course, the protection mix has increased slightly from 3.9 to 4.2%. We have had a little more on the savings side. Our par mix was slightly higher, and some of our unit-linked products we have a slightly higher margin than that was there in the previous year, primarily on account of a small increase in the average premium paying term.
So my last question would be, what are the growth plans for ICICI Prudential going ahead, say next 2 to 3 years?
So structurally, if you see over the last 15 years, life insurance business has grown slightly ahead of nominal GDP, and we have grown a little ahead of that. We do expect that this trend to continue. In fact, from an overall basis, given the shift towards financialization of savings, we may probably see a more accelerated trend on a long-term basis.